On May 10, 1869, the Golden Spike was struck at Promontory, Utah, connecting the Central Pacific and Union Pacific Railroads and completing the Transcontinental Railroad. This landmark event linked the American West to the commercial East, cutting coast-to-coast travel from months to less than a week and significantly boosting economic growth.
Enter Charles Dow, a journalist and market pioneer who wanted a better way to measure the health of the American economy. He needed a simple, objective method to track economic activity and report it to readers using facts rather than opinions.
I need a way to measure the health of the U.S. economy and write about it for the Wall Street Journal.
Before we dive deeper into Charles Dow and the creation of the first stock market index, we need to answer a simple question. What is a stock? A stock, also known as equity, is a security that represents the ownership of a fraction of issuing corporation. Imagine a company worth $1 million. If that company issues 1 million shares, each share represents a tiny piece of ownership. As the company grows and becomes more valuable, investors may be willing to pay more for those shares. If the company struggles, the value of those shares may decline. Stocks allow businesses to raise money for expansion, while giving investors the opportunity to share in future profits and growth.
The next concept to understand is trends. A trend describes the direction prices move over time. Whether it's stocks, gold, oil, or real estate, prices move in one of three ways.
An upward trend indicates a continuous rise in asset prices, characterized by higher highs and higher lows. A downward trend indicates a continuous fall in asset prices, characterized by lower highs and lower lows. Understanding trends is important because they provide insight into market sentiment and the balance between supply and demand.
To measure the economy, I focused on transportation and industry. Transportation showed whether goods were moving, while industry showed whether goods were being produced. By averaging the stock prices of leading companies in these sectors, I created a simple measure of economic activity. The two averages of railroads and industrial stock prices must confirm each other's price trends. These averages going up and down must have a meaning. Stock market's direction can be gauged by analyzing the movements of specific market averages. An upward trend is indicated when one of these averages, such as the Dow Jones Industrial Average, surpasses a previous high and is supported by a corresponding rise in another average, like the Dow Jones Transportation Average. By analyzing these averages, investors can gain insights into the overall business conditions and future market directions.
Charles Dow's observations eventually became known as the Dow Theory, one of the foundations of modern technical analysis. The theory is built on 6 key principles that help understand market trends rather than predict them.
Stock prices already reflect all known information, news, expectations, and emotions. Prices don't move randomly. They tend to move in identifiable uptrends, downtrends, or sideways trends. Trends have 3 phases: accumulation, public participation, distribution. A trend must be confirmed. Related market indexes or sectors should move in the same direction. Rising volume should accompany a rising trend, and strong selling volume should accompany a falling trend. A trend remains in effect until reversed. Assume the current trend continues until there is clear evidence that it has changed.
Here are some common market index for different countries. Averages provide a quick way to analyze trend of any economy. Averages can be even made for sectors. Here are some common sector-wise averages in USA market. Averages exist for industries within a sector. You can quickly see trends for semiconductors, software, banks. Thank you, Charles. Technicians today use a host of stock market indicators: breadth, volume, momentum, sentiment, etc. But most of them still include their observations of the Dow theory. The concept of confirmation has become a bedrock of technical analysis.
I am glad I could help.
Any wise words for new investors?
Pride of opinion has been responsible for the downfall of more men on Wall Street than any other factor.
Thank you, Charles. With Scanner X Market Intelligence, you can check averages of industries and sectors. Check which sector is leading or lagging. Check trends and interesting market analysis with Scanner X Market Intelligence.